Hey, good afternoon, folks. Kunal here, Bulls on Wall Street. Want to take a second, go over our favorite time of trading during the year, which is earnings seasons. For those of you guys that know our style, a lot of it is based off news and momentum. Sure, we trade technical analysis, but what we like to do is ideally marry the fundamentals with some type of news release, and then marry it with what we know about technicals to get our perfect intraday entries. And today we had a really cool earnings play on a KITE. And so I never buy them or short them before earnings. I wait for it after. It's called post-earnings drip. And it becomes very, very powerful. But the first trade we took today was in this KITE. And so you can see this KITE's been in a really, really tight range for months, right? And so today, I had earnings out, and so I'm always scanning for gappers in the morning, right? So I use trade ideas, and I'm looking for stocks that have earnings, so using a certain type of mix, right, between gap, volume, flow. Specific sectors like biotechs tend to do a little bit better on certain types of gaps, and so that's kind of marrying that perfect storm, right? What's the formula for what really makes stocks move? Like, why would KITE move X amount of dollars versus a stock that may gap that's a little bit heavier? It might not move at all, right? And so the structure of the stock always comes into play. And so the first thing that we do is once I see the gap, I don't short it, but I start waiting for an intraday pattern. And so, one of the things that I'll do is I'll wait for our opening range breakdown patterns. You can see the stock gap down here and developed a quick opening range in the first 5 minutes. And so as this thing broke down, so I shorted this like 73.26, a few hundred shares, and boop, right? You get this nice quick dump down to 71, and so it's literally I had like 300 shares, cover into it. An opening range pattern is meant to be a quick pattern. Most of my opening range patterns, I'll make a couple dollars, $1, $2, $3, $4 gain on the stock, but it'll happen in minutes. It's not supposed to take a long time. Opening range pattern is a short pattern, so your hold times have to be short. Where a lot of people make mistakes is they take a really short pattern, and then they want to marry the stock and hold it all day. Doesn't work like that. The shorter your pattern, the shorter your hold times are going to be. So if you have a 5-minute pattern, what do you think your hold time is going to be? Right? It's going to be quick dumps. And then what happens is, once the day starts to progress, we start waiting for our secondary pattern. So as the stock retraces, the SSR goes on it, it's going to have a retracement. As it starts to retrace, I'm just looking for the next bear flag. So as this thing breaks this trend line right here, I short 300 shares of this bad boy, and then boop, first spike down, I cover 100. Second spike down, I cover the next 100. And then the next spike down, I actually covered the third batch, the last 100 shares. It actually continued down for a while. It gave us another bear flag here, and I was already done for the day. I locked it in. If you're in 1 hour into the day and you make some good money, go and enjoy yourself and go have some fun. There's no point of trading all day. Nice short, right? But that did give us some other entries here that we could have taken, and now you can see this thing's kind of starting to bounce back. And you know what? Later in the day, it may squeeze and then kind of fizzle back out and maybe give another short. But that's the awesome part about earnings plays is that once the stock is in place, see the volume spike? That's because of the news, okay? And so now you're marrying that fundamental factor with the technical factor, and so your technical plays will work cleaner. Stocks that have fresh news have order flow that's independent to what's going on in the market, and so your actual intraday patterns will work cleaner and faster than it would if you just had a regular technical pattern. And that's why we like to kind of marry these, especially during this season. As earnings season will probably be going on for a few more weeks. And so every day I'm looking for these type of gappers and stuff like that. You can see AAY, and there were a handful of other ones that have done this the last couple days. And you can do them to the upside and downside. The key is daily chart pattern. Look for the structure of the stock. Is this stock even had the possibility of making the type of move we want? Sector, and then of course, depending on whether you trade better, long, or short, I start to really filter through depending on what I'm personally trading well, and that'll give you the juice you need. So I hope that helps. Feel free to leave any questions in the comment box, and I will chat with you guys later.